Merci bien, Coralie, and allez les bleus. So, that's it. That's all I got. I got one joke in French. Well, look, this is amazing to be here. And frankly, when they gave me the assignment of interviewing this young man right here, Austin Federa, who's my counterpart, the head of strategy at the Solana Foundation, not only was I really excited to do this interview with him in this conversation, I figured, how often do two strategists get to sit up here and pontificate?
Oh, yeah.
But the real reason I'm excited to interview you is actually one of the very toughest conversations I've ever had. Austin and his colleague Amira grilled me on their podcast. And they were as tough, if not tougher, than any senator, member of Congress, or central banker. So they're like, Dante, is it true that your stablecoin is internet funny money? How do you sleep at night? And I was looking at them like, I thought this was supposed to be friendly. But since we are in France, we'll be friendly.
We'll be friendly. It's a very friendly city.
Excellent. So, Austin, Jeremy just described, I think, this end of the beginning, to quote Winston Churchill.
Yes.
Where at the end of a 10-year run, you have this composable, programmable internet money that actually works, and it works for real people in 191 countries and counting. But one of the reasons why I think it works is because of what you do at the Solana Foundation, which is that it works because we're a technology-neutral product, and we're not picking winners and losers. If you go to PayPal and you ask PayPal to open up the rails so that everyone everywhere could participate in PayPal, you're going to get a very awkward answer, or they're going to hang up the phone. Tell me how this contrasts with what you're doing with the Solana Foundation.
Yeah, so blockchains at their best, and this is sort of what Bitcoin originally started as and what Ethereum sort of laid groundwork for, are neutral infrastructure for developers to build whatever they want to build on top of them. This is something that's usually flattened in a lot of the public conversation around blockchains. In the United States, we do not believe Comcast and Verizon should be limiting what TikTok videos you can look at. Now, there may be other government regulation dealing with that, but that is something that's much higher up in the stack. That is not dealt with by the base layer communications protocols. It's dealt with something higher than that. And so one of the great things about blockchains like Solana is we have USDC on Solana, and it was one of the first major applications to come over and support the Solana blockchain. I think it was October of 2020 that Circle launched USDC on Solana. At that point in time, no one knew what Solana was, but the folks at Circle saw that this was a blockchain that has really fast transactions, really fast finality, very low cost for transactions, and very high capacity. And those are all of the things that if you look at a modern, or maybe not quite modern, but you look at a payments transfer network like MasterCard or Visa runs, you need fast finality. You need these things to be able to handle 50,000 transactions per second at some times. And one of the great things about stablecoins and one of the great things about USDC is that it is not limiting in who can use it. As you were saying before, anyone can sign up and go through a process to get approved to mint USDC, to receive payments and move them on and off chain. But when you're moving money on chain, there are companies like ASICs that were selling a shoe on blockchain, and they were selling that with USDC, and they did not have to talk to Circle once. And that is the real promise and power of this, is it gets that authentication layer out of the stack and lets developers and consumers and merchants transact without anyone sort of sitting in the middle there and making sure everyone's approved on all sides.
That's amazing. And I think, I would love to just dig in a little bit to the stats that back that up.
Yeah.
Because it's one thing to say, the use cases that a blockchain supports are generalizable, or they might be focused on payments or gaming and things like that. But in the span of only a few years, the growth of USDC on Solana went from 0 to more than 2.2 billion today.
Yeah, it's about 2.2 billion today.
Last check, I just checked back there in the green room as we were debating this debate. And so to what do you attribute that? Because the way we look at blockchains is obviously at the technological layer. We're looking at a whole host of factors. But what, from the Solana Foundation vantage point and the chain itself, makes it unique?
Yeah, well, if the chain were built differently, that number would actually be much higher. One of the things that's pretty unique about Solana is because it moves so quickly, the liquidity requirements for things like DeFi markets are actually much lower. So you'll see that Solana is anywhere between 5 to 7 times more capital efficient in its DeFi than other networks. And so what that means is just a little bit of stablecoin liquidity can actually support a huge volume of transactions. One of the stats I love is last month there was $900 billion of stablecoin volume done just on Solana, which is wild when you think about it. And the majority of that's in USDC, right? This is sort of what most people prefer to use. But when you look at that compared to something like Ethereum, Ethereum is the highest, right, for Circle issuance for USDC. Solana's after that, and it's a good deal of a gap between them, but it's also a pretty big gap between that and the next person on the list there. And so I think what we see is we see a lot of people wanting to transact in a regulated stablecoin. The launch of CCTP on Solana is also huge. That's something that developers have really wanted for a while, and it's awesome to see Circle bring that to Solana. And so there's a lot of things around how much the network is used and how people want to use it that mean regulated stablecoins are in high demand.
All right, so here's the tough question, the ones that you would get from a public policymaker or a regulator. Mr. Federa, my understanding is that these blockchains are little more than Google spreadsheets on Amazon's cloud, and that their computational intensity causes climate change. What say you?
Well, the great news is, from the climate change perspective, modern blockchains like Solana are actually greener than Google. One Solana transaction uses about a third as much energy as one Google search does. So if you're basing it against Web2 services and systems, they're actually pretty green. One of the great things about the proof-of-stake transitions that pretty much every major blockchain except Bitcoin and Doge have gone through is that it crashes their energy usage. I mean, Ethereum is now 99.97%, I think, greener than it was before the transition to proof-of-stake. Networks like Solana have the lowest carbon per transaction, plus the foundation also buys carbon offsets for the whole network as well. And it's, I think, about $150,000 a year. It's very little compared to what most companies have to pay, in part because the network is just so green and efficient. For the other piece, right, about are these things just spreadsheets and databases? I mean, the answer to that, the honest, truthful answer is yes. Now, the difference is everyone all around the world has access to that database, that ledger, that can verify that, when I say I paid you, I actually did pay you, and that's provable on chain. I don't have to go call up my credit card company and say, hey, did that payment actually go through? Or the experience I've had before of sending a wire transfer, getting a call from my bank, missing the call, and the wire transfer being reversed. You don't have to deal with these things when you're dealing with blockchains. And that's one of the real powers of this technology, is that this is the first system that anyone has ever built that is trust first. We have to remember, most of the internet was not built for the type of use cases we use today. It was built for academics to swap research papers, or it was built for incredibly protected military networks to be able to handshake nuclear launch codes back and forth. It was not built with this idea that you needed to build attack-resistant systems. And blockchain is the first internet-based technology that was built assuming everyone is trying to cheat and steal from you. And because of that, it actually builds incredibly robust, secure systems that you can't get those type of assurances in anything that's built on Web 2. This is one of the real powers of blockchain. I think it's been underexplored and underutilized. Is that this technology? It is the only way to truly objectively establish digital trust.
All right, he would make for a very good witness in a public testimony. So that's my next recommendation for you.
Oh, thanks.
So you described trust first, and obviously that's one of the issues that we all care about, I think, in this sector. It is a sector that is distinct and unique for the ability for people to build on it.
Yeah.
But there's very specific things that the Solana Foundation has done to kind of spark the imagination of the developer community and ecosystem, and to break down, in many respects, the monopolies or the duopolies that are the very traditional ways people move money today. So can you tell me a little bit about how you're galvanizing the developers around this? And then I'd love to turn a little bit towards some of the use cases and some of the real-world applications that you anticipate on Solana.
Yeah, certainly. So the work that's done today by folks at the Solana Foundation and others all around the world is really to onboard high-quality developers who are building applications that have commercial viability over the long term. right? And so this is a very, and yes, there are meme coins on the network as well. This is the beautiful thing about blockchains, is you can have both of these things coexisting at the same time. But the work from a developer perspective, one of the things that's interesting about Solana is most of our developers that build on the blockchain did not come from Ethereum. They're not people who have been building in blockchain for 10 years. They're people who have been wanting to build new types of user experiences, new types of systems, and they've been waiting for a blockchain that has the performance that lets them be able to do that. And so in 2021, which is sort of the first time Solana came on the scene for most people, most of the developers who were building applications on the network were coming over from Web 2. They'd been, working at Amazon or Google or Apple for 8 years. They'd made it in the traditional sense, but quite frankly, they were often bored. And they wanted a new challenge. They wanted to build types of things that their companies were just too big to support them building. And that's where some of the great things like, marketplaces for NFTs on Solana came from. Lots of other types of systems is people really deciding, hey, I want to build something different, and Solana is a blockchain that is fast enough that I can go build a lot of those things. A great example of this, which heavily features USDC, is Phoenix. And Phoenix is a central limit order book built on chain that doesn't require cranks or any of these other systems people have used before. And almost everything trades against a USDC pair on that. And that's where you get these sort of incredible volume numbers coming from on chain, is the liquidity and the order matching in these DeFi ecosystems. These resemble pretty closely modern markets. Now, yes, 400 millisecond blocks is incredibly long by the standard of high-frequency traders, but that is about the response it takes to get a Web 2 handshake nowadays for an application. You press a button and something happens in 400 milliseconds. That is fast enough that your brain does not register a delay. And so that's kind of, to get to your second question here, this is the sort of user-facing applications and experiences that are really only being built on Solana today.
Yeah. Well, and obviously for us at Circle, and very personally, one of the things I'm most excited about is the opportunity to actually break Web3, especially the financial services part of this, out of the speculative phase and into the utility value phase. And it wouldn't be possible to contemplate really being a challenger to incumbent networks like Visa and MasterCard and MoneyGram and Western Union, many of the very firms that actually work with Circle and USDC. Yeah. But if you want to compete with them, you actually need to enable this internet of value to overcome the walled garden problem in payments.
Yeah.
Is that payments inside the walled garden, for those of us lucky to be born inside the walled garden, are fast, ultra efficient, et cetera. But for most of the rest of the world, those types of low-cost payments are inaccessible. And so cross-border payments remain stubborn. FX remains stubborn. What types of use cases, do you anticipate building on? And then I think there's some ways that Circle and the ecosystem more broadly can kind of keep this at heart.
Yeah, so a great example of this is Visa's use of USDC on Solana with WorldPay. And what they're doing over time is they're switching over from using more traditional financial rails to using USDC on Solana to actually move money from the sort of master Visa accounts down to the WorldPay accounts, and then eventually all the way down to merchants, and eventually maybe someday down to consumers. And this really matters because as that Monday morning hits and billions of dollars that were unable to move over the weekend move. This actually creates a massive flow of money. And at the same time, a lot of people are in collateral short positions just from the number of credit cards they've processed over the weekend where they don't actually have settlement on that yet. And so, the world of fast payments right now does exist, but it's always within a border of a country. Right, the U.S. has got FedNow, which is sort of rolling out, sort of maybe not.
I call it FedWhen.
Yes, there you go. That's a good joke. Or you have fast pay systems in the U.K., right, that have existed for many, many, many years. But the minute you try and go outside of that, it breaks, and you fall back to SWIFT. You fall back to these very slow money transfer systems. And so even in a world where every country has built out a fast instant payment, even a central bank digital currency style product, moving money between countries is still going to be something that requires something like USDC and Circle to be able to facilitate. And so, from Nabil from WorldPay was talking about how, one of the real possibilities he sees in the future is the fabric that weaves together all of these regional or government-based fast pay systems is USDC and regulated stablecoins, because it's much easier to integrate each one of those to a blockchain system than it is to integrate 100 countries' different fast pay systems with each other. You just do the matrix math there on how many new connections you need to make, but instead you plug everything into USDC, you plug everything into Solana, and you've actually built a system that's probably faster than those fast pay systems.
So when Kai Sheffield at Visa reported a 50% improvement, or it was an 80% improvement in internal settlement on their blockchain experiments with USDC, it's ultimately Solana's benefit or impact that is being reported.
So this is one of the stats I love, is that most internal banking cores have about a 3-second settlement time, which means if you are moving money from one of your bank accounts to another of your bank account within the same bank, it takes about 3 seconds for the database to update. On Solana, that's 400 milliseconds.
It takes time for bankers to get up and walk over to one teller and the other. This is not. We're literally inside a bank vault, and this is a safe space.
Well, it is empty.
So, hypothetically speaking, what if there were two high-quality, well-regulated payment stablecoins on chain, one denominated in euros that was MiCA compliant, and one that was a U.S. digital dollar that was also compliant with the rules? What would happen, for example, in a world of on-chain FX, another very stubborn area of the global economy with very little incentive to change, is FX, like cross-border payments and a host of other things?
So FX is one of those areas that I think is really ripe for disruption by blockchains. It is the only global market that actually moves 24/7 nowadays, is FX trading. Stocks don't do this, bonds don't do this. Like, this is really the market. And there's like trillions of dollars a day that move over this system. And so this is really a liquidity problem first and foremost, is that right now you don't really care if you're getting a dollar from Chase or from Bank of America if you're doing FX trading, because they're considered the same thing, even though they're actually their own database entries. On blockchains right now, you have enough USDC liquidity to really make this a reality. The euro product is still getting up there, but as we start to see these things well collateralized on both sides of the trade, for lack of a better term, you now have the ability to actually do FX on chain that is faster than the execution of FX in the traditional systems, which anytime you have a speed differential, you have arbitrage created. And so I think it's going to be very interesting to see what happens, especially as more countries around the world, and the US is really lagging in this, codifies payment stablecoin legislation that allows any sort of financial services company to not have to say, all right, I've done my diligence and I trust Circle. They say, Circle's got the little stamp from the government. I don't need to do any diligence. I automatically trust this because the government regulators have already said this. And yes, we're very close to that, right? But in the United States, we do not have payment stablecoin legislation yet. I think that would be a huge unlock for the US market. And then, in Europe, with the regulations that are coming in this June, right, we are moving into a place where, EU regulations are always a hot topic coming from the United States. I'll say you got Apple to switch the USB connector, so props for that. But some of the stuff related, it's the only reason they did it. But there's a lot of stuff related to blockchain legislation, I think, that still needs to be worked out over time in a way that doesn't drive the industry offshore, right? This is something we've seen in areas like South Korea, where it is one of the markets that trades tokens more than anything else, but it's very hard to actually build a company there building on blockchain technology because of the regulations. And so, I think the future here for FX is really awesome. We need more regulated products in blockchain, but we also need to make sure that government regulation is recognizing that the base layer is a communications technology. And yes, communications technologies are regulated much more differently in Europe than they are in the United States. But one of the things I love to talk to, and I talk to regulators and senators about this, is if the internet were invented today, it would not be considered a communication technology. It would be considered a financial technology. Everything we do on the internet is financialized. Every website you load, there's a micropayment for an ad. And if that is the definition of now what has to be regulated with a money transmission license, we would not have the internet we have today.
Be pretty heavy-handed. I get to put on my policymaker and regulator hat one more time. And for a content plug, we will be unpacking MiCA and regulatory issues in the rest of our sessions today, so stay put. All right, so let me ask you one more skeptical question, and then we have a bit more time before we wrap up. You know, these blockchains are great. I've tried it, but I had to get a native token whose value wasn't convertible to make a payment on a blockchain, and all of the points that Jeremy made in his earlier commentary about the technology is still in your face is still a reality for many people.
Yes.
And so how do we make the tech fade to the background? And does this weigh on your conscience that you're imposing this friction on these good people?
It does. And I think the reason for that is the friction is the best way to achieve safety today. If you sort of roll back to the United States before we had FDIC, Federal Deposit Insurance Corporation, you needed to know which bank you were banking with in a really serious way. You don't need to know that anymore unless you have, over the deposit insurance limit, which we've apparently decided doesn't exist anymore. It's a topic for another day. But before you had FDIC in the United States, you really had to care about which bank you were banking with. And today, you actually still need to worry about what stablecoin you're using, what blockchain you're using. The technology is in your face, and in some ways, that's good. Now, I think there's a lot of ways we could improve that. One of them is there's no economic reason that a user needs a gas token to transact on a blockchain. We can, build better versions of this. Circle has a gas station, which is, one of these really important technologies. One of the things that I think will surprise people is there are large financial service technology companies that are building tokenized real-world assets on blockchains like Solana. Their lawyers have said they can do it. They've reviewed the frameworks that are possible for it, and their hang-up is always the gas token. It's the one thing that, from a compliance standpoint is hard for some institutions to get around. And so that's one area where, abstraction makes a ton of sense because it's all within the same network. And, you're not having any sort of security risk or any sort of ideas that you don't know what's under the hood there because all it's doing is paying the transaction fees.
That's right. And this is something that is available on Solana now? This gas abstraction, or it's something that's coming?
Yeah, there are several organizations that have built different gas abstractions on Solana. One of the world's largest financial service technology companies has to actually use that because their lawyers have said they cannot sell the asset on their balance sheets because of the regulatory uncertainty in the United States around is that a commodity or not.
That's amazing. All right, well, with only a few more minutes to go, this is the point of the conversation where we switch and pull on a little bit of a Apple, Steve Jobs sort of tech vibe and say, but wait, there's more.
One more thing.
One more thing. So in keeping with Circle's mission, which Jeremy, I think, described perfectly, and we're at the end of the beginning of the 10-year journey, which is to raise global economic prosperity through the frictionless exchange of value, there's a number of things that will be coming to the Solana ecosystem, which we're very excited about and want to talk to you about before our time wraps up today. Number one, building a better internet financial system. And I hope folks can see the slides for everybody. The screens are sharing here, okay? Number one, we're building a whole host of services that will be coming to Solana. So much of the Web3 services stack that Jeremy described, from programmable wallets to the smart contract platform to the gas station, which is a solution that would abstract away the pricing and create seamless pricing in USDC for transactions, plus over time the availability of not only USDC but the EuroC stablecoin, CCTP, cross-chain transfer protocol support, of course, is already in place. These are all developments that we're really excited about and that sort of contribute to this developer-driven ecosystem approach to better, accessible, programmable internet money. Additional tooling will be coming, which will be, I mentioned already a lot of these, if not all of them. I mentioned all of these already, so be at the mercy of the slides. So Web3 Services will be coming to Solana soon. And it's an announcement that, at least here at Circle, we're very excited about because it's an ecosystem that we care a lot about. Broadly, we care a lot about the entire ecosystem. We want to ensure that people everywhere can build not only on a reliable blockchain, but with reliable services from Circle.
Yeah, and I'd say we are very excited for this at the Solana Foundation for a few reasons. One of them is, quite frankly, the single source provider issue with many companies. right? With many companies, they want one place to go to figure out their gas station solution, to figure out programmable wallets. And so, if they have to find a new company to do that on Solana because they've been using Circle for Ethereum, but now they want to build something on Solana, that is a real hurdle when it comes to getting through compliance. And so I expect a lot of product teams who are already using Circle services will be very excited to see this expansion to Solana.
That's exciting. Well, and here, for those of you in the audience, you'll get access to an early access program using this nifty QR code. With a few minutes to spare, I learned that if you can't be trusted with time, you can't be trusted with money. Any last words, my friend, before we bid you adieu on this stage?
I mean, I really want to go back to where we started today, which is, October of 2020, Circle launches USDC on Solana. Back at that time, that was only a few months after, just for those who don't know, Solana launched in March of 2020, which is, right as the world went into lockdown, right as every market started crashing. It was, one of the best and worst times that you could launch a blockchain. And so for Circle to come in just a few months later, just as smart contracts have started shipping and say, we see the future and the potential of this chain, it was a really big moment for the network in its early days. And so it's great to be back here again.
There's something about crypto and picking market timing right as the real economy crashes, 2008 in Bitcoin, 2020 in Solana. Austin Federa, I bid you adieu. And deep thanks for the partnership and the great conversation.
Thank you.
Thank you.